Hello Sector Watchers, welcome to the show. This is the 164th episode of Sector Spotlight for Tuesday, the 21st of February. The first trading day of this week, as yesterday was President's Day, and I hope all of you in the US enjoyed your long weekend. And although it's not a holiday in Europe, it allowed me to record Sector Spotlight a bit earlier than usual on Monday the 20th. So I didn't have to go through my normal nocturnal routine after the close of the US markets. My name is Julius the Kempenaer and I am presenting to you from Amsterdam in the Netherlands. In this episode, I'll be looking at the current state of sector rotation, highlight the most important rotations from a positive as well as a negative perspective, and after that I will zoom in on the communication services sector and highlight 7 individual stocks, 4 worth considering in your portfolio, and 3 that are probably better avoided. Ladies and gentlemen, please enjoy this week's episode of Sector Spotlight. The current sector rotation continues to show a market that's in transition. There's still no sector inside the leading quadrant, and utilities has just moved into lagging. So we can see that shift of the sectors, the blue sectors like discretionary communication services, to a lesser extent real estate, technology, that are improving, moving into that positive heading towards leading. And then this whole group here that is currently going through some sort of a setback. And the question here is whether they will reach the lagging quadrant or whether they will rotate back up. What's interesting to see is that the defensive sectors, utilities, staples, healthcare, are still at a negative heading and are closest to crossing over into the lagging quadrant, or like utilities already has done that. The other sectors, you can see that energy is already starting to pick up a little bit. Industrials, financials, materials are inside weakening, but they have still some room to maneuver. If we bring that to the daily, you can see it's almost a reverse of that image. You can see that technology, discretionary and communication services, they're all inside weakening, while on the weekly those tails are actually doing really well. So that leads me to believe that these sectors have gone through their initial thrust, their initial period of improvement, and they are now going through a setback, and I'm actually waiting and watching for these tails to curl back up and start a new relative up lag, confirming what we see on that longer term image that's shown on the weekly RRG. Similar with utilities, staples, healthcare, you see utilities, staples and healthcare, that's the one that's right there, they're in that hiccup. They have seen that weakness. They go through what looks like a temporary relative improvement, and I'm actually watching for these tails to roll over without hitting the leading quadrant and get back in sync with what's happening on those weekly tails. And then we have a few here, that's industrials, financials, those are right here, as those were the sectors of which we said we need to see whether they can curl back up. And for example, financials and industrials seem to be doing really well there with their move back towards that leading quadrant. So that could bring them in line and push those tails over and curl back up again. Real estate, the daily is moving into lagging, and that's almost like getting back in line with that loss of momentum that you see on the weekly chart here. Now I want to do quickly a few sector charts, and I'm going to concentrate on the ones that are in improving and that are actually continuing to look better all the time. And let's start with communication services. This sector has been doing really well for the last few weeks after we completed that double bottom and came out of that long downtrend. We saw the initial rally and we stopped around resistance near 60. and we're now coming back and we're looking for a new support level. And whether we've reached that here around 54 or maybe we need to go back down to 52, not sure yet, market needs to tell us, but it is definitely the first corrective move after the breakout. That's where you actually want to start looking for buying opportunities. When you see that that downtrend has been broken, new series of higher highs and higher lows is in place. This is a very important new support level around 52. Every low, when a low is being made above 52, 52 and a half, that's a positive sign, because that means that buyers are getting more aggressive and they want to get back into the market. If you look at technology, little similar, not as aggressive as communication services yet, but 3 weeks already holding above that resistance area, so that is good. That relative strength continues to improve. So that tail for technology seems to be doing well, and it looks like we can go further ahead towards that leading quadrant and higher in terms of price here on the chart. And then finally, the consumer discretionary sector. Here also coming out of that falling trend, breaking that resistance area, holding up above resistance for 3 weeks already, so that's a good sign. That gives relative strength the time to pick up and to improve, and it's pushing those RRG lines back up. In the next segment, I'm going into more detail into the communication services sector, because I think that we've already seen that rally. We're coming off right now, so we're going through that forced correction. That's an interesting area, an interesting time to look for buying opportunities in individual stocks inside that sector. On the RRG for sectors, we saw that XLC, the communication services sector, is almost crossing over into the leading quadrant after a strong move through improving and at a long tail, which indicates that there is power behind the move. And we've seen over the last few weeks that the chart for XLC continues to improve. So it's about time that we start taking a look into the members of the communication services sector, what's going on inside that sector. And on this screen, I've loaded the members of XLC on an RRG, and on the left-hand side we have the weekly RRG, and on the right-hand side we have the daily. And you can see that it's pretty spread out, pretty evenly spread out, I would say. And we can highlight a few of the tails that are quite readable, and the one that really stands out is Meta Platforms, already crossing over into leading. We've got WBD, Warner Bros, Paramount, that's doing quite nicely. And then we've got Netflix, inside weakening. We've got T-Mobile, inside weakening, almost crossing over. We've got EA Sports, ATVI crossing into lagging. So you can see there are quite some moves going on. What I'd like to do is actually highlight a few really strong, but also a few really weak stocks in this sector, and then compare the daily and the weekly rotations and see if we can find any alignment that the daily is reinforcing the move on the weekly chart. So I'm not going to go over all the individual tails. That would cost way too many precious time. So I'm going to highlight, just load the individual stocks that I want to talk about. And I've done that right here. So these are the stocks that I want to talk you through right now. And in order to do that, I'm going to align them based on the symbol name so that we can actually talk about the same symbol on the left and the right hand side. So the first one here is Dish Network. And I think you already understand where I want to go, because Dish on the weekly RRG is moving rapidly into the lagging quadrant. Actually came after a rotation through improving, never made it, and is now moving back into the lagging quadrant. And if we bring that to the daily, then you can see that Dish is inside improving, but it's at a really short tail. So there's plenty of time and room to maneuver and roll over to get back in line with that weekly tail that's rapidly moving into the lagging quadrant. We go to EA, Electronic Arts, and we align both the weekly and the daily. Then we can see that the weekly is a long tail moving rapidly into the lagging quadrant. And on the daily, you see a hiccup, but it's still very low on the RS ratio scale. And as you know, that means that there is plenty of room and plenty of time for EA to roll over inside the improving quadrant and roll back towards lagging, getting back in line with the weekly. So for both Dish and EA, when we see those daily tails roll over and start moving back towards the lagging quadrant, that's the sign, that's the alignment that we're looking for a further push lower in relative terms, I have to say, because we're still talking about a strong sector. XLC is outperforming the S&P 500. It's a strong sector. So we're eventually looking for the strongest stocks in the sector. And even though it is a strong sector, these stocks, you may better avoid them because you're not going to outperform the communication services sector with these names. And the third one is Fox. That is Fox News, Fox Corporation. And you can see here this is a different one. This is a strong stock. Fox on the weekly is inside weakening, but it's starting to curl back up. And we know that that is a strong sign. So we're coming out of leading, went through a corrective move in relative terms, and we're now starting to snap back up. And if you look at the daily, then you can see that the daily tail has already rotated back into the leading quadrant, bringing Fox in line with the weekly. So that daily tail, that short-term improvement, is now in line with that little curl up that you see on that weekly tail, making Fox a very good candidate to look for higher prices as the daily and the weekly tails are now getting back in sync together. If you go to Google, that's a different story. That is a negative story. So Google on the weekly is very clearly inside the lagging quadrant. It's at stable momentum. It's not losing any momentum anymore or gaining momentum to the downside. It's probably the better way to word it. But it's slowly but steadily moving lower on the RS ratio scale, which means that it is in a relative downtrend that is very stable. So it's very stable, underperforming the communication services sector. And if we bring that to the daily, then you can see that that tail went through a period of improvement and is now rolling over and heading back into that lagging quadrant, bringing Google back in line with the weekly. So the daily and the weekly tail are reinforcing each other, making Google a stock inside the communication services sector that's probably better avoided. On the opposite side, we've got another mega cap name. We've got Google inside lagging, but Meta, look at that long tail pushing it into the leading quadrant. That is a very strong move. Meta made a reverse from a strong downtrend, pushing back up and now moving into the leading quadrant on that weekly RRG. On the daily RRG, however, you see that the tail is already rolled over. So here we have a situation where Meta, and you can see that on that daily RRG, went through a very strong period, 2 periods actually, because we rolled. This is what we like to see. It's crossing over, and then you roll back up. That's the second leg, and now here's the third leg, and now we're going down again. But that weekly tail is still looking very strong. So despite the fact that Meta is inside leading on the weekly RRG, it's going through a bit of a correction on the daily, which probably indicates that it's not the best time to get on board. We're going through a relative correction, so once the tail of Meta on the daily RRG starts to curl back up and head in the same direction as that weekly tail, so in that positive RRG heading between 0 and 90 degrees, that's the time when you really want to start looking to pick up Meta again. If you look at Paramount, that is on the weekly inside improving. So it's a little bit earlier stage. Meta already went into that. Paramount is picking up there. You can see how it's rapidly gaining on the RS ratio scale. Momentum is positive, but not gaining any more, which means that it is picking up a stable pace right now. But if you look at the daily RRG, you can see that that tail has started to curl back up. And that's interesting because now we have a weekly tail that's moving towards leading, and the daily has already gone through an improvement. It already came through that leading quadrant, through weakening, and now curling back up. So it's almost getting back in line with that weekly tail, making Paramount an interesting stock to watch for more upside in coming weeks. And then finally, we've got Warner Bros, WBD. Look at that weekly tail. Very nice positive RRG heading, still inside improving, but it seems only a matter of time before it's going to cross over into the leading quadrant. And just like with Paramount, we see the daily tail inside weakening, but already starting to curl back up. So here we have, again, a stock that is at a strong relative trend, picking up rapidly on the weekly RRG, and on the daily you can see that the tail went through its first leg upwards, coming down through weakening, and now starting to pick up again. Once these two get back in sync, and we're going to look at the individual charts in a minute, this could also be a very interesting stock within that sector. So here we have the stocks that are strong from a relative point of view. So that's Meta, that's Warner Bros, that's Paramount, that's Fox. And then there are three stocks that I picked that you could probably better avoid. That is EA, that is Dish, and that is Google, or Alphabet if you wish. So let's have a look at the individual charts for these stocks. With regard to the individual charts, so I kept the weekly RRG on the left, and then we have the price chart that goes with it on the right hand side. And I'll start with the names that I think are better avoided at the moment. And the first one is EA, Electronic Arts. You can see that the tail, let me highlight it here, is rapidly moving into lagging. And you can see why that is. Look at the weakness of relative strength. It went out of a very nice uptrend, and all of a sudden you saw that reversal. And when the sector is moving up and the price is doing nothing, that is causing relative strength to drop, and to drop really rapidly. And now you can also see a deterioration on price. We already took out that first low here. Now we're dipping below that previous low, and we're like challenging that 109 area, which is, I think, pretty important. We had two dips here, resistance area here. So it's probably the first target around 109. When 109 gives way in EA, then there is plenty more downside, and you could be looking at 85, those two lows here. So EA, very weak, pretty significant downside, especially once 109 breaks, and very limited upside. That makes it a relatively unattractive name inside the communication services sector. So the next one I want to look at is Dish. Let me load up Dish here for you. So the Dish network. You can see that Dish dipped below a very important resistance level, support level back in September 22. We made a new low in that 13.5 area, tested the former support as resistance again, and then from here you can see that all the successive highs are lower. That indicates selling pressure. Every time sellers were happy to sell at a lower level, and there were no buyers, or the buyers only came in at those lower levels. That's causing these lower highs. For now, demand still showed up around 13. When that gives way, when that 13 area, when that horizontal support area gives way, there is renewed downside to be found for Dish. And the tail on the RRG suggests that there is more downside to come. Look at that weekly tail pushing further into the lagging quadrant at a negative heading. So even if we don't break it, the upside is very, very limited for this stock, but I think that it's dangerous, especially when it breaks below 13 US, 13.20, that support area here. And then the final stock that is inside lagging and moving further left, that's Google, Alphabet. Then we look at the price chart here, then we see that we bounced off that 85 level. That looked good initially, and we bounce back to 105. You can see that it is a rough guide. That line was penetrated here, was penetrated a few times here. But look at the relative strength. That's where I'm focusing on. Look at how that has been rolling over and is now in a new series of lower highs and lower lows. That's really a weak RS line, a really weak relative strength line. And you can see that translated into the RRG lines, which are pushing even further down. The RS ratio is at the lowest level of the last 5 years. So for now, Google does not have a lot of upside potential, and it's a really weak stock from a relative perspective. Let's go to Fox. That's the first one here. Inside weakening, but curling back up. Let's bring up the chart here for Fox Corporation. And you can see what's happening. We rolled over in a very weak period, and now we started that new series of higher highs and higher lows. And last Friday, we actually closed above that previous high. It's very early still, but even if we were to put in a new high here, it's still higher highs, higher lows until we drop back below 30.85. So 30.85 is probably the new support level, old resistance, now support, if we ever get there, because this tail here is telling otherwise, and we saw that on the daily, that it's even stronger pushing into the leading quadrant, and that relative strength versus XLC is actually very stable and very strongly moving higher, and it's almost pushing above its own resistance. And you can see how the RS ratio line has managed to stay above the 100 level still, and it's now starting to be pushed up by newly found relative momentum. Let's look at Meta. That's the one that's right here. It's the one that we said it's strong on the weekly, but the daily is rolling over. And you can see why that is. Meta went through a very rapid rise, ran into a resistance area somewhere between 184 and 200. New high was being put into place, and we're now trying to find support. It's now going through that corrective move that we saw on that daily RRG. So do you want to go back in right now? Probably not. As I said, when that daily RRG starts to point back up and move into that 0 to 90 degree, that's probably the time when I'm getting more interested in Meta again. It's definitely a strong stock. It's one of the big names in the sector, so it's going to carry that sector higher. But for the time being, there are probably a few other more tradable opportunities, but keep your eye on Meta, especially when that daily tail starts to curl back up and you have a new higher low in place. That's probably the time when you want to start looking at Meta again. And then we have Paramount inside the improving quadrant, moving to the right, meaning that it's picking up more relative strength. And look how this one came off. This was really sold off at the start of 2021, and you can see how it found support here. And we're now 26, the 26, that's an important resistance area now. But we held above the previous low, so that resistance becomes support, go to the next resistance, old resistance becomes support as a jumping board for a new move higher. So what I'm looking for here is for that daily tail to curl back up, but especially when Paramount moves above 26.30 roughly. When we can get a weekly close above that, then we're completing a really nice bottoming formation, and then there is plenty of new upside will be released if we take out that resistance area, and that's going to push that weekly tail definitely into that leading quadrant. So if you're a bit aggressive and you're early, you may want to pick it up right now, because we already found support here and we're moving higher. That relative strength is nicely curling higher. If you're a little bit more conservative, you may want to wait until we take out 26.20 and jump on board then. It's very likely that that relative trend will continue onwards and outperform the communication services sector. And then finally, we got Warner Brothers, WBD, and let me bring that one here. Very nice long tail pushing into the leading quadrant. We saw that tail on the daily getting back in sync with the weekly. We need a little bit more work there. But here's the same as we saw with Paramount. We sank below an important support area. That was around 17. We dipped below well, this is 8.5, 860, and we're now back to that major former support area, which is now acting as resistance. But the good news is that we're holding above that former resistance, now acting as support, and you can see that we're already jumping back up. Let me actually make this chart a little bit bigger and see what I mean. So I'll give it a little bit more space here. You can see that we actually took out this high here, meandered a little bit. We bounced off support last 2 weeks, and we're now on the way up. So when WBD takes out 1650, 17 US dollars, I think that's the sign for more upside potential and the completion of that bottoming formation below that important support level, which now is acting as resistance and needs to be taken out. But you can see the gradual improvement of relative strength. It's got all to work for, especially when we take out that resistance area. So these are the names inside the sector that are worth looking at, in my opinion. And as you know, the sector itself is already crossing over into the leading quadrant on that weekly RRG. So definitely something to keep an eye on. Forget about, probably better avoid Google Dish and EA, and the names that are worth our time and interest, especially when these resistance levels are taken out and the daily tails start moving back in sync, are WBD, Paramount, Fox, and then Meta probably needs a little bit more time. And it's a wrap. Ladies and gentlemen, thank you for watching. I hope you enjoyed the show. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, with replays on StockCharts Television, YouTube, or any of the on-demand channels. I'm looking forward to seeing you again next week for a new episode of Sector Spotlight, same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.